Well, good morning, everybody. It is February 22nd. This is the weekly review. We take a look at what happened last week, what it portends for the coming one and the next few. Also look at what the portfolio looks like, how it's performing, whether you're strictly, following that portfolio or simply using it as a guide, maybe picking and choosing what you want. Anyway, the idea is to give you a feeling for how bullish you should be, in my opinion, or how conservative you should be on a short-term, intermediate-term basis. So let's pop in here. Last week it got exactly what this market wanted on Friday, in my opinion, and that was the rotation. Nasdaq still led on the way up, right, 1.3%, but everybody else was starting to close in a little bit, and that's a good thing. That's kind of what we need to see. As you get extended on whatever is leading on the way up, then you need the others to come in and start taking over, and that's what we saw starting to happen in. They kicked the can down the road. If we're looking at the major things that happened last week, the can got kicked on Greece. There is some more data on Monday that could throw a wrench into this, but assuming that doesn't happen, then this is kind of off. The pressure point is off for a while. Earnings, there's no more earnings for the most part. That bad news is kind of out of the way now, so that gives us the ability from a market perspective to continue to move higher. The economic data still doesn't look that good. It's getting better in Europe. Some of the data I've seen out of Europe looks better, but overall, we're stagnated at best. And maybe that's just a function of winter like it was last year, or maybe it's something deeper. We're going to get GDP numbers revisions again this week, so we'll see what those look like. Technical picture, we saw that rotation on Friday with the XLI, XLV breaking out, which is what we were looking for. And I was talking about this before, and what I was saying was that we wanted to see rotation into groups that had not led, right? So if you think about it from the perspective of a market and what's happening with a market, you get a push up in something, right? And everything else just kind of pushes, but not as much. Then all of a sudden these start looking cheap compared to that, right? That's what rotation's all about. Instead of buying these now, they quit buying those, and instead of these going like that, they start going kind of to the sideways or up a little bit. And those that were underperforming, they start getting bought and they start moving like this. And that was the rotation we were looking for, and that's the rotation that we saw start happening here as these swing point highs all start to get taken out. This is the XLI on the daily. If we look at it on the weekly, we also saw it there, a breakout. So now you have a breakout here on the weekly, you have it on the daily. That's breakouts over multiple time frames. That says this should extend, right? And if it does, that should push this market higher. This is a large sector. XLV is a large sector. So if we look at it, exact same scenario there. You break out over multiple swing points, multiple time frames. That's the daily and weekly. That was the weekly. Here's the daily. You can see the push, exactly what's needed. Now, if we look forward and say, okay, what do we want to see next? We want to see the financials kick in because they look cheap, right? And all of these now have ABCD structures that are in play. Here's the financials. They came back, they tested, they haven't extended yet. Breakout would take them over multiple swing points, just like we're starting to see now in the other sectors. So from a sector perspective, we're getting exactly what's needed. That says this market can push higher, and that's what you want to see happening. If we look at, well, it's not that one I want to go to. Let me go back to this one here. If we look at the negatives, from a technical perspective, NDX, composite, these guys are overextended. The NDX, if we bring that one up, you can see it pushed again on Friday, but this one's like 1% or so over where it should go on a short-term basis. Now, it got a little bit of a pause, if you want to call it that, and on a longer term basis, you could argue that, hey, this thing's just going to keep going, and it may. you know, there's nothing to say that when a projection's hit that it's going to stop, because we know that there are larger projections still in this, right, here on an ABCD structure on the weekly. And also from the range perspective, right, there's a range breakout. If we project that up, you know, the targets are up here as well. So, you know, just because it met its short-term target doesn't mean that it's not going to come all the way up and just meet the longer-term target. You got to break out on multiple time frames, so it may simply just extend. You know, so just because we met our targets short term doesn't mean, you know, the weeklies override the dailies when you get this kind of move going. And right now, that move is going. Now, you know, I always respect what's happening on all time frames. And so, you know, the way I work this is I always look at the short term and the intermediate as well and say, okay, it's done what it's supposed to do. You're looking for 2 to 3 bars, right? You break out. You know, bar, you get over it here, here's bar 2, you're looking maybe one more bar and then some sort of a retrace back to do a retest regen. So from a weekly perspective, this one also can push farther, doesn't have to come back, but on the daily, this one's also met its targets, right? It's quote unquote done on the daily. And what I'm talking about is the ABCD structure, not the range, but the ABCD structure. This is completed. Right? That's done. It's over. On the range, right, this thing still can move farther. If we extend that and look at that range, right, this has farther to go. And so we could see this move farther. It's not done yet. Okay, so from that perspective, hey, it looks good. You got everything you wanted. If this is the worst negative we've got, that's pretty good, right? Where we're simply saying, hey, it's gone farther than we wanted it to, faster, you know, compared to the others. On the positive side, you know, the dollar's consolidating, the bonds are still fading, consolidating at best. The VIX showed, you know, this was interesting, and I've just started really watching this thing. This showed big drop, right? Big reversal on the downside, and it did it with respect to the S&P. The percentages that this moved down were large compared to how far the S&P moved up. This is volatility. This is saying how volatile do we expect it to be. The volatility is coming out of this, and what does that mean? Well, that means that the expectation, if we look at the S&P 500, is that this thing is just going to grind up, right? It's just going to grind higher, right? And that's going to take the volatility out of this market. And so that looks like that's what's happening there. S&P 500, 2000, S&P 500 and Russell 2000, you know, they both did bullish retest regen. So if we look here, here's the retest regen. This is on the daily on both of them. Here's the retest regen, right? Test, 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 4 days. Gets over it here, and then 4 days in a row. Test and tries to break it, especially on Friday. Doesn't get it. That reverses. Nice big stretch. Folks, that's the best case you can get, right? You come back immediate. Usually that probability is not nearly as high when you come back immediately. And it's not, but it held. And when it holds, that projects that this thing's going to push farther. If you look at the Russell, you kind of got the exact same situation happening over here. On this case, right, the immediate retest regen was off a much larger bar, so the probability or the possibility of it reaching deeper was higher. But what does it do? Pushes in there twice, tests twice, can't break it down. If you can't break it down, then you got to expect they're going to take it back the other way, and I believe that's what you're going to see. So that's the Russell, that's the S&P, the retest regens. If we look at the ABCD structures, you know, I highlighted these last week. We're not done. They project higher, 2130 to 40 on the S&P. Much bigger numbers out here. So, you know, when I look at all of these, I like what I see, and I think that, you know, if you're looking at this, you have to just say, hey, you know, how good can it get, right? Right now, it's about as good as it can get. Everything that needed to happen has happened. Large consolidation, breakout, range trade breakout, extension now, right? You already had it on the composite, already had it on the NDX. That's where you want it to lead. Now you're getting that extension rotation, which is necessary to get the farther push. And so I like what I see. Fundamentally, ECB, the QE over there, that seems to be a huge piece of what's happening. And if you look at any of those stocks in that group, and we can look at like the currency neutral one, HEDJ, for example, this thing is just pushing higher, right? So you gotta like what you see in Europe. Europe is pushing. The Fed, as I said, the week before, and now this week, it doesn't look to me like the Fed can raise rates even though they'd like to. We got that better economic data in Europe last week. China still kind of making waves as to wanting to loosen the strings and push things higher. And then the other thing we're starting to see here, and I mentioned this I think a couple of weeks ago, is we're starting to see the wage component, right? The lower paid wage component get pushed up. We saw Gap do it. We saw Starbucks do it. Now we saw Walmart and Aetna do it. They're pushing up the minimum wage, so to speak, inside their own companies. That is that virtuous cycle that eventually, what you want to see eventually take place is a virtuous cycle to where people make more, therefore they can spend more, therefore we have to produce more, therefore they make more, therefore, you know what I mean? That cycle. Is that happening? It's kind of starting to take place. And, when I look at this stuff and say, maybe it's happening. Now, eventually that becomes a problem, but in the beginning, that's a good thing. It's not a bad thing. Fundamentals, they're still negative, right? I can't see good fundamentals and haven't seen them for about 3-4 months now. That's going to have an impact at some point if it doesn't change. Now, again, maybe it's just the weather, right? We're in the middle of winter. We've had pretty big snowstorms, in the East Coast, especially like Boston has been smothered in snow for, 3-4 weeks. So, maybe that is a large piece of what's happening here. Maybe it's something different. We'll see as the spring gets here. It's not that far away. We'll see how it changes and if those numbers start to change. West Coast port operators, they've been on a strike. They basically starting to have an impact now. Again, is there this wage pressure? Is it a sign of this virtuous cycle starting to take place? I don't know, but it's something for us to keep watching. What do I watch for in the coming week on the technical side? I want to see this continued rotation of the XLV, XLI. I want to see those extensions, right, where those take and move higher and start to press higher, right? That would tell me that this rotation is going to take this market much higher. If you look at the projections here, for example, and I'm looking at healthcare, they're huge. I mean, this thing has gone nowhere, and now it's just starting to get started. That is a very long bar to project up. So when I look at this and say, hey, where do I want to see, or what do I want to see? I want to see the money rotate into the XLV, XLI, and into XLF, while the others take a break. I think that's the most important thing to watch for. Last week they were the outperformers, which is exactly what we wanted to see. And now we want to see these sectors extend, right, and see it move to the financials. This week, economics, not much earnings. This is a done, basically. Economic, though, we got 3 Fed speakers on Friday morning. That may be something there. And we've got Yellen on Wednesday and Thursday. So a lot of Fed talk, some PMI numbers, some revisions on GDP, so forth. So nothing that stands out as huge. But again, more economic data. I suspect it's probably not going to be good. Geopolitically, really nothing happened. It improved, if anything. That ceasefire in Ukraine is tentative. It's not doing very well, but it's still hanging. And the Greek situation, of course, looks like it maybe got pushed down the road. What's my bottom line? It did exactly what we wanted, folks. Everything that we wanted to happen happened. And when I see this, that tells me that I have to expect this market's going to push higher and meet those targets. I got ABCD targets about a buck, 1.25 to 1.75 on the SPX and the Russell. I want to see them go hit those targets, right? Push up there another 30 points or so on the S&P this week, hit the targets. Then we may get some sort of a rest, right? That's where we might see some sort of a pullback. But as we move up there, that's where we're going to want to shoot for, and where we want to take some profits potentially on the portfolios. If I look here at the portfolio itself, and I've just highlighted a couple of these are doing great. I mean, I can't argue with what's happening in the portfolio. So let's take a look at a couple of these. I wanted to highlight some of these that look the best, and show you what I'm looking at, just as a way of talking about the technicals the way I look at them. So having said that, let's look at one of the ones that we just added. We went over, we wanted to get into the industrials, we wanted to get into healthcare. We already had UNH on the healthcare side. We tried to buy the XLV and didn't get it. On the industrial side, I wasn't so interested in getting spread, but UTX showed up as a breakout on all time frames. And when you get a breakout on all time frames, usually that says that is a extremely high probability this thing's going to continue. So the breakout, let's look at it together here. You got your breakout here, right? A little tentative action, retest, regen there, and then it just started to push. And so that was UTX on the daily. If you look at it on the weekly, you're getting that extension. Here's the breakout here. You can see the swing point highs. It was 2 of them. It gets over both of them, right? Gets over both of them. Trend higher, extension. Exactly the sort of stuff you want to see. And on the monthly, you had a breakout on the monthly as well. Folks, you can't ask for a better setup than this when you're looking at all this. This may go into my core position, as this extends. But if you just look at this extension and say, where can this thing go? Well, it's not a bad looking extension on any of the time frames. So here on the monthly, for example, the extension here is about 127, and that's using this low, up, back down, right, and up. So about 127 is the number on that one. If we pull over now and look on the weekly actually extends even better. So if we take this and push it up, we've got the extension here to there, back down, back up. So if you do the price points here, that measures to about 131 or so. And then if that's on the weekly, if we go to the daily is actually already extended almost. That one only goes up to, I think, about 125 was the number. So you got measurements from about 125 to 131, and in a high probability, very high probability, it will hit those targets, and more than likely hit that 131 target as well. So that's UTX. That's the way that one looks, and that's just one you try to run. So 125, 131 are the targets. All these stocks are pushing higher, looking really well. I'm going to take the last 2 down here and look at those in more detail. So NXPI, this is a chip stock, and we know that on the short-term time frame, the SOX, the NDX, all of those are extended. And when that happens, typically the stocks inside that group are going to consolidate. They're going to pause, and that's what this thing is doing. So when it does that, then what you want to do is you want to look and see where that retest regen zone is. More than 6 bars, right? It's got 6 bars already, so the 7th bar will be Monday. More than 6 bars, you can expect to test back into that area. That's the area that we should be looking at to see if we can put some additional exposure on. And so you'll see in the portfolio, I've got an order sitting out there. I believe it's right around 82.11. It's right into these 2 price points. Try to add again to it. So that's the sort of way that I try to take ebb and flow of the market. Those things that are extended, you want to try to sell some as they push higher. Those that that aren't extended, you want to try to move into them. And one of the ones we moved into, if you remember, and I'll switch to it even though it wasn't one I was going to talk about, was the UNH. We had moved into this and really couldn't get any traction. All of a sudden it pops up out of nowhere, right? It's going to go up and push these highs again. And the way this one traded, I like the way healthcare is doing what it's doing, but the way it traded over the top and back under, right? The volume suggests that we'll get a test and then consolidate, maybe push back down into this area one more time before it really tries to take off. Or if it just pushes higher, right, then you simply try to buy a retrace. But you got to take some profits, in my opinion, as it comes into that area, right, unless it just blows right past it. But take some profits there and look to play the ebb and flow again in a stock that's in a sector now that is starting to take off. One more I wanted to look at was ZLTQ. So Zeltiq is the this is like the mothership of stocks. I mean, we bought this thing. I'm gonna pull this weekly back over. I'd have to go back and see. I'm glancing over here. It looks like we bought it back in August on this bar, right? That breakout, and we bought it somewhere up here around 18, I believe it was. That breakout, let me see, that was 18, 19, yeah, it was about 19. So somewhere in here, 19 to 36 is where it's going. In 3 months, or I mean, excuse me, 6 months. That's a huge move, right? It's almost a double. Earnings coming out now, coming out this week, and as you can see here, if we pull it back to the daily, is they've just been consolidating. Nobody wants to sell it. Nobody wants to put more money into it. And that's no different than what you and I have been doing, and that is that we sold this spike up, right? Got our money set aside and said, okay, we're going to wait for earnings. Well, earnings are tomorrow, 23rd. And, this thing could just skyrocket again because it's got a nice consolidation already. It's 2 weeks. This thing can just take off, and it may. I don't know if it will or not. Or if it's not quite what they want after such a huge run, we can easily come back into this area. If it does, this is the area we want to buy back into, right? These big bars. And the bars I'm looking at here in particular is this wide price spread bar, this wide price spread bar, and that prior push up there. So those 3 bars, when you look at them, this whole area right here is the spot to be looking for another repurchase. So we'll see how it behaves. I believe those earnings are after the bell tomorrow. We'll see how it behaves after the bell and then see what we want to do on Tuesday. We've made good money on it. We've traded in and out of it. We have to look back, but I think it's 2 or 3 times now. What we want to see is one more time. And if you look at this, I've talked about it before, and it's why it's a core position. If you look at this on a long-term time frame, and I'm bringing the monthly over, this low, so what, 320? That high, 24? So 320 to 24, we'd actually have to do the percentages, but that projects a pretty nice move. Matter of fact, let me pull up those percentages for you right quick and show you. And at least most of you know that I use percentages because when you get in a stock like this that has moved a huge way, especially when it came from a low number down here, right? If you just do the math and you look at this and you say, okay, how far is that, right? Let's just do it together. So if we take that bottom, well, let's take the high, 24.79 minus from it 320. What does that give you? About 21 bucks. Okay, take 21 bucks added onto this. What does that give you? 34 bucks. So 34 bucks is right where it's at. That's on the monthly. That says it's done, right? Well, if you do it in percentages, it's not done. It has a long way to go, right? Percentage-wise, this thing can move to 103. That's why I use percentages when I look at these things. I don't take and say, okay, it's just arithmetic projections, but I take it as a percentage projection, and it gives you a very different number. Most of the time, the percentage difference is not that much, but in a case like this, especially on a long-term time frame, it can be a huge difference. So I don't know that this thing is done. I have no idea if it's ever going to get to here, but at the same time, it's important to look at it, I believe, from a percentage basis, not an arithmetic one. Okay, so I've talked about a lot, and I've talked about it fairly fast, but I can't say anything bad about what I see, right? Market, as much as I think this market is overdone, right, in terms of long-term projections, I have to realize, just as you do, that this quantitative easing is a whole new world. I don't know how far this market can go, neither do you. And we have to respect the price action as long as it continues. So far, it's continuing. So far, we have to respect that and stay with it. And so if I leave you with any thought today, it's like don't read into this what you think should happen. Read into it what is happening. What is happening is this market continues to want to push higher, and we have to respect it and try to trade it that way. Folks, thank you so much for joining me today and reviewing these notes with me. And as always, I'm here for you to help. And if there's anything I do, give me a holler. Until next time, take care. Goodbye.